Okay, Innova International, we had a spike in price followed by a shakeout. Look at this enormous shakeout. If we look at this on a weekly chart, you're going to see that this one is more or less in a box right now. And so if this makes a new high, then you have a new box formed on the weekly chart. We're going to add this to the watch list. This is a tradable stock in my view. I may already be in it actually. One of the things that happens is the primary issue with me is money management. Money management is almost more important than the stocks you actually pick. Why? Because when you trade the way I trade, you buy breakouts. Volatile stocks tend to move up and they tend to move down. You don't want to put a whole lot of money in them in one spot unless it's like a total no-brainer. Then you can up your risk. But short of something being a total no-brainer, what I like to do is to only risk 2-3% of your account in any one trade. Unless you're extremely good, eventually you will go broke as a trader. And so money management becomes key. So what would I do if I were to buy this stock using the strategy that I teach in the course? This would be a breakout buy right above here around 86.18, and you'd put your stop loss down here around $80, slightly below this area. Using this formula that I wrote, which by the way I'll share with you if you ask. It's actually available on Traders View. I love their software though. I still use it. I'm actually a subscriber. So what this does is this helps me determine the risk, dollar amount risk in any particular trade, and I use average true range for the week in order to do it. So I take an 8-day average, 4 times multiplier, and I want to risk $200. You can put any number in here you want based on your account size. I don't like risking more than $200 regardless of my account size. So this tells me that I'm going to buy 22 shares. Now, if I buy 22 shares and this stock goes against me, if it gets below this area here and I sell it, I'm not going to lose more than $200. And if it keeps going up, once it becomes profitable, you just move your stop loss up, and the very worst that can happen is you break even. So that's basically how it works. And what ends up happening is over a period of a bull market, you will accumulate a lot of positions, especially if you have a large account and you're risking a little bit amount of money. But you will have many positions in stocks that are moving up. It's essentially like you're running your own growth mutual fund. But with today's technology, it's super easy. I mean, I'll even show you how to do it. I probably have more than 20 open positions right now, and I can go through all of them in 15-20 minutes. Super easy. Okay, we're done with this one.